In this video, we're going to be looking at win rates versus risk to reward ratios. So if you're on our site, docs.cryptofusionbot.com, click Custom Strategy Library and click Strategy, Planning, and Success. Here you'll see our risk to reward ratio planning sheet. Something to understand is that our win rate is inversely related to our reward on our risk to reward ratio. So let's see what this looks like. Let's pick a time frame of about a month, 30 days, and let's say we have a 10,000 USD account. And our goal is to make 10% per month. So we're going to say $1,000 is our profit target during this trading time frame. In general, you don't want to risk more than 1% of your account. 1% of 10,000 USD is 100 USD. And then let's say we're only making 10 trades. If we have a win rate of 60% and we're making 150% on our wins, we're not quite going to meet our profit target. We're going to be at $500 here. You can see we're going to win 6 times and lose 4 times, right? And we're still going to be profitable, but we're not going to be meeting our goal. So let's go ahead and increase the volume of trades that we make over our trading time frame. Rolling the same probability, say our win rate is 60%. Now we are much closer to being profitable, but still not quite yet if we're making only 150% on our trades. So let's take a look at the number of trades if we did one each day for our trading time frame. Then let's look at our win rate at a 1.5% reward ratio. We will be making $1,500. And so in order to be successful at this, you want to let's look at how many times. You're going to win about 18 times and lose about 12 times. And this is why we don't risk more than 1%. If you're risking significantly more than 1% of your functional trading account, right? The best traders are going to lose many times in a row. In this case, it's foreseeable that you could lose 10 to 12 times in a row. And if I lost 10 to 12 times in a row, I'm only going to be down 1,000, 1,200 USD on my 10,000 USD account. That is not going to break my functional trading account through this cycle. So if you find that you are trading, you're risking more than 1%, and if you look at the amount of times you could foreseeably lose based on your historical win rate, if you are breaking your functional trading account, that is not a good thing. It is not good planning, right? We want to plan for success. So go ahead and run this sheet to see if your strategy will be successful. Something to take into account as well that is difficult to think through is that each asset has its own volatility index, right? Take a look at some volatility indicators on the asset you're trading if you're not very familiar with it. To give you an example, when I set take profits on Bitcoin, normally my top take profit is going to be somewhere in the 20%, right? I want to meet my goal, right? Say I'm 7, 8, 9x leverage at 20%. That's fine gains. I'm making over 150% on that gain, right? But something like a altcoin, something like SHIB or something else, my last take profit could easily be in the 70, 80% range. And that's pre-leveraged, right? To give you an idea, because these assets move at dramatically different rates in terms of volatility. So you need to be familiar with the asset you're trading, and you need to stick to this trading strategy that you pick. There's no crystal ball strategy that's going to give you 100% win rate, and you're going to let your risk reward just run through the roof, right? Every day. Nobody has that. And if they did, There wouldn't be all of these things out there showing people how to get better at trading, right? If someone had that strategy. So that doesn't exist. The important thing is that you are familiar with your strategy. Your strategy works well with the volatility and behavior of the asset, and you have a functional plan for the capital, profit target, risk, and amount of trades that you plan to take over your trading time frame. Thanks for joining, and I hope you have a great time trading. Enjoy.